Good Monday evening, everyone. Thanks for joining the Market Chameleon webinar series with Felix Frey. Felix, how you doing tonight?
Hey, how are you?
Hey, I want to apologize for everyone who came on early. There was a glitch in the original Zoom, and I thought we were in the practice session, and it dropped us live right in, and we were talking to Felix kind of just about business, whatever. So if you came in early, I had to shut it down and restart it. So apologize before that. Before we get started with Felix, let's go through the disclaimer. Just take a quick look. Just so you know, neither Felix nor Market Chameleon or myself, Will McBride, are registered investment advisors. This is not professional advice. This is for informational purposes only. So take everything you hear tonight with the disclaimer in mind. We'll let people start coming in. Felix, you want to tell a little bit about yourself
Sure.
as people come into the webinar?
Sure. Let me share my screen. And I just started a little bit here. Share. All right.
Now, Felix, how do you want to take questions tonight as you're getting your profile up?
You know what I think? I think maybe wait till the end.
All right.
Wait till the end, or you know what? I'm going to try to get two ideas in, and then maybe in the middle of the first and the second.
All right. So we'll go through. You can we're on YouTube and the Zoom. So put your questions into the chat, and we'll get to them when Felix has a break in between the two ideas. And with that, Felix, the floor is yours.
Sure. So just a quick background. I've done a bunch of these with Market Chameleon. I appreciate Market Chameleon having me. I graduated Wharton in 1995. I spent the next 10 years at Swiss Bank and Bank of America at the investment banking side, where I was dealing with the top guys in the world, mainly hedge funds and big institutional funds. And then after that, I went and joined a $4 billion hedge fund in New York. That's really where I saw something new, and I was very intrigued as to how they were looking at options. I realized that it was vastly different than my expertise and what I was taught, and realized also that not many people fully understood what was actually going on there. I refined what they were doing. I actually took what they were able to do it just off the cuff, and I sort of asked a lot of questions and really started digging into the whys and the hows and the whats and came up with a tool that I built to help answer a simple question, which is, how do you choose the right strike to buy? And that's how I started 3 Steps to Profit, how I started Options Geek and created this options trading system, education into tools, and how does that develop into trading ideas. It's called 3 Steps to Profit. It's groundbreaking because the information you'll find there, honestly, you can't find it anywhere. The toughest question in options is, how do you choose the right option? So I lead with that because there is no answer anywhere. You could spend 1,000 hours looking for it. You're not going to find it. And you can ask any professional out there, and I think you'll get an answer that you probably won't be satisfied with. There are many answers, but nobody really has the answer. And I can prove it to you. I mean, I've done many videos to show people, even FINRA, the Series 7 test, it doesn't even come close to giving you education on how to find the answer. The SIBO education, the OIC, none of that education, that's the industry education. And they don't give you an answer. So I've spent many years trying to figure out the answer, and really it was my experience at the hedge fund. So I built 3 Steps to Profit as a system behind that, and I realized very quickly that I needed to help the investor, help the person wanting to learn how to get from point A to a trade idea or to execution of an option. It wasn't just, how do I press the buttons? It was, what am I doing and how do I actually do it? So the education, again, brand new. I then started with 1 tool and now we're up to 5, 6 tools. The tools are basically there to support this base for the investor to grow on. The process I'm going to show you today to find an idea is not the only process. I think it's a great base for the user to add on to that process. Okay, we go through technicals, but I go through simple technicals, and many people have a dozen ways to look at a chart, and so that's okay as well. You can incorporate that into this process, but I think this as a base is going to give you an idea of how to get from understanding options, understanding risk reward, having a few tools to filter things down for you, and coming up with a trade idea. So with that, I'd like to say that, I'm going to show you the process today, but I put this series up, eight part series. It's only 3 to 6 minutes each part. So it's about 25 minutes on my YouTube channel. I would suggest, if you're not a member already, that you actually take a look at it. It will not be up there much longer. I promise you that. I've left it up there for a little bit just to allow people to look at it. I don't have that. I'm not big on YouTube or even on social media, but I think that there's a lot of valuable information in there, and you can learn a lot just from those 25 minutes. So I would impress that you take a look at that. I think it's worth your while. And after that, there's another video on the Options Geek homepage where you can just click the button, get to, and I think that video will save you, especially if you're brand new to options. I think it'll save you 1,000 hours and a ton of money, because you're going to spend a lot of time trying to figure out what you need to know. And that it's a 25, 30-minute video that doesn't even explain options. It explains what you don't know and what you're about to enter, and how to prevent you from getting lost and frustrated. So it's about, I would say 30 minutes, but it's well worth watching, and that's on optionsgeek.com. So with that, let me take you through.
I put the link to Felix's YouTube channel both on the YouTube chat and also in the Zoom meeting chat. So feel free to link over, and I'll also put a link to optionsgeek.com so everyone has that.
So when we start, usually how do you come up with an idea? I do a lot of reading. I'm just always reading the newspaper, reading whatever somebody's got. If it's a good article, I'm on it, right? So you read an article or research report, leads you to a stock. Now what do you do? Now what? Okay, I was looking at an article about the Inflation Reduction Act. Want to learn a little bit more. I was researching a little bit about General Motors, cheap stock. That's where I started, and I wound up seeing this name, MP Materials. So MP Materials is a rare earth mineral miner, and I believe they're the only operational rare earth miner in the United States. But I had known this name from the past for a year and a half ago, as everything was screaming higher in 2021. And I know that they have, the rare earth minerals have something to do with the batteries, and that's about as far as I know, and the whole EV movement. So I'm looking at GM. I come across this name because GM has this agreement with them, this long-term supply contract, and I wanted to take a look at MP. So I don't really know much about MP, but I go to this tool, and I'm going to show you in pictures first, and then I'll walk through these tools that I built to kind of get you full circle. But I go to this open interest tool that I have, and I can click up here. You could see 1%, 5%, or 10%. That's just the top 1% of cells that are on this board here. So if I click one, it's going to show me this one here, and 8,774 open interest on the March 35 strike call options. Okay, so calls, March 35 calls, 8,774. Now what? Like, now that I got that information, what am I doing with that? What do I need to see? What do I care about? Well, when you're looking for ideas, good ideas, I think it's important to think about it like you're a detective. I always say, I love detective movies. I love detective books. I used to watch Friday Night Dateline all the time. I'm a little busy now, but I used to watch that all the time. Big nerd, detective nerd, whatever. I like the whodunits. I like the understanding. How does a detective get from walking to a crime scene to finding the killer? To me, that's an amazing process. And so I'm always asking those questions: the why, the what. How do I get from here to the next step? What is the next step? Well, if I click that cell, this pops up. Now, what is this? This is at the top, it's the premium. It's a graph of the premiums, but underneath there's volume and open interest. Okay. And I see that there's this one green line up there, green bar, that has about 7,500 contracts, 8,000 contracts. And that's telling me that it's obviously, you could see that. And it's also underneath telling me that the open interest went up the next day. So this immediately is telling me, obviously something happened on that day, something traded, which is MP call options, and the open interest the next day went up. So it's an opening trade, likely. And now I want to look some more detail. So I go down below, I can find the November 22nd, that date. I want to go back to that date to see it. And I see some traded on the bid, 8%, 50% on the ask. Okay, maybe it looks like a buy, but I just don't take the data at face value. Like a detective, I want to verify, right? You're at the crime scene, you got a suspect, you ask him, where were you on the night of so-and-so? And he says, I was over at my friend's house, John's house. And you say, okay, great. The detective just doesn't stop there. He goes and meets John and says, John, where were you? And John says, well, we were at the bar. Okay, that's great. Still, he goes further. He goes, okay, well, if I look at the video camera, am I going to see both of you at the bar? Yes, you are. Great. He still goes to the actual bar and gets the video to see them. And once he sees them, he doesn't completely knock them off. He just says, okay, what they're telling me is the truth. We're going to do the same thing here. It's important to always verify data. When we look at option prints by itself, there's a million of them each day, right? So, how does that help you? There's a process of filtering. There's a process of verifying and understanding what happened. So I want to understand more about this particular trade on November 22nd, right? So I will go to this page. It's another page that I have, another tool. And on this tool, I basically am trying to verify what I see. So I go back to November 22nd. November 22nd, I see March 35 calls, trade 77.94 times. And then down here, I see multiple trades. Ask side, which is a good indicator of what happened. It was on the offer, especially if I see it several times, but it's not always the case. It's not always the case. Just because it says ask side doesn't mean that I bought it or this person bought it. Okay, it could very well mean that someone sold it. I won't go into why or in that explanation, but that's what I teach as part of the education. It's trying to show you the different techniques of verifying what you're seeing because it's important. What are we looking for? We're looking specifically for buyers of options and we're looking for opening trades, buyers of options and opening trades. So your question should be, why? Why are we looking for those? We're looking for those because buyer of options means that the buyer believes that this particular stock, MP, is going to make an outsized move, meaning it's going to make a move that the market doesn't anticipate. Okay, otherwise he wouldn't be buying it. That's the definition of opportunity, definition of an option being cheap or expensive. He's buying those because he believes that they're mispriced to some extent. He's paying $4, in this case, about $4.20, and he believes that's a good price to get the reward, the profit that he expects to make off of MP moving higher. So what do we do now once we have this situation where we know that this was a buyer, this was an opening trade, we know the open interest went up. What do? Well, I go back to the chart. I posted, I want to see, I want to actually get a visual of the crime scene, if you will. What was he thinking? What was he doing? He bought it on November 22nd. He bought 7,500 March 35 calls for 420. Now what? What am I thinking here? What do we do with this information? Okay. Well, maybe the question is, where does he think MP is going? Where does he think MP is going? Here's a rhetorical question. Does he think it's going to 30? No, he's buying 35 calls. Does he think it's going to 36? Not likely. He bought the 35 calls paying 420. Does he think it's going to 38 by March? No. We could say again, he paid 420 for the 35 calls. So just by asking you those questions, those are the easy questions. You could say, no, he's not actually thinking it goes to. So if you can say definitively no to those, that at some point, you're going to start saying maybe he thinks it's going to 42 or 44 or 45. I think you could agree to that. And so what I did is I then go to this tool I created, the new options chain. And I go back to November 22nd. So you could see him there, November 22nd. And this is the board. And this is him. Okay. Right now I'm in January. So I'm going backwards. I'm going back in time and I'm placing myself into where this guy was at that time. Stock was 33.76. He bought that day 7,700, 78, 7,500, call it, at 420. I created this. This is my concept here, the RR dollar. That is called the risk reward break-even price. The risk reward break-even price. What does that mean? That means that he cannot buy this option, okay, unless he really believes he can't pay $450 for the 35 calls unless he believes the stock is going above 4608. That 4608 is sort of the over-under for that particular option. If he was going to buy the 40s, then he'd have to believe above 50.35. If he was going to buy the 45s, then he has to say, then I got to start thinking of the above 55. That might be too high, so I'm going to stay away from the 45s. 50.35, even if I stick in a number at the target stock price, the machine might not get me to that level. Okay, so it's important that RR dollars, that break even, that risk reward break even on a mathematical basis of what the market thinks. That is sort of a market's best estimate of where they think the stock is going based on their price in the premiums. So here he is, he bought 7,500. Now what do I do? Okay, I see that. Now this is a one-way, this is a two-way function, meaning A goes into this black box, spits out B. But I can also go the other way around. I can take B, stick it into the black box, and it'll spit out A. So what happens here? So I can start playing around with the target stock price. I stick in 49. If I stick, initially I stuck in 47, 48, 49. The first time the bar, the blue pointer lands in the 35 range is right around 48. At 49, it's there. 50, 51, it's also there. At 52, it jumps and it says, no, you can actually go closer to the 40s. So it starts moving. The bar is also going to move if your confidence level moves. So I allow people to move that confidence level around to see how the pointer's moving. Higher confidence, well then at 47, if I have a higher confidence, that points starts moving closer to 35. And I'll show you that in a second. So by finding the target stock price, where I get the pointer to land exactly where he bought it, and this machine is built to think the way he's thinking, then I have backed out into a range of his target stock price, 49 to, let's call it 48 to 51. So I put that there on the chart just to visualize it, because I'm trying to visualize, I'm trying to put the puzzle together. Here we have one print. First, a news story leads me to this print. I'm now trying to put it all together and get a visual for myself on what's happening here. Now, I'm looking at this chart, had a big drop from April 2022 all the way down to October, but it's turning a little bit. You can see this, you can actually see it turning here. It's not, the slope of those lines are changing. The problem I had here that I'm looking at here is that with the stock down so much, you get a lot of tax loss selling here towards the end of the year. And I wasn't so confident. First of all, I wasn't so confident that it would get to 48.51 just yet. I thought it would need some work to sort of round out a little bit. And so I was unsure, to be honest. I was a little bit unsure. Now, I also look at symmetry, and I'm looking at this turn here, this drop here in June that first drop. And I'm saying from June to October, it's been making this turn, and that's about 5 months. And so I'm going to add 5 months to October, which gets me to about March, interestingly enough. So I'm thinking, okay, so this guy is kind of thinking this thing's going to turn right back. And if you can imagine, it's going to start looking like a toilet bowl, right? A cup and handle type of thing, but like a cup. Okay. So that's a good thing. I'm also looking at Fibonacci retracements here, and I'm looking at the Fibonacci retracement. The 61.8 retracement is about 48. Which is interesting, right? Because I got some reasoning. I'm trying to make sense of the target that I found and what I'm looking at. And I'm saying, okay, technically, this could sort of turn there, can get back up there. Fair enough. I'm looking at it, I'm saying, okay, but maybe it's not for me right now. I'm going to hold off a little bit, right? So now what do I do? Well, we got to this point. Now I want to just show you quickly. That was on paper, but I want to show you how quickly that I'm doing this. And once you learn it, you will be able to actually do this as quick as that. Hang on one second. Let me jump on to share my screen. So here we are MP, right? I'm going to go to the open interest. So I learned just what I did there. I go to MP. This is what I'm doing each day. I see something, I go to MP. I say, okay, I got the 1% here, 5%, 10%. Usually I start with the 1%. It's just to focus a little bit here, 8,000. I can click on that. And there it is. I see it right here, November 22nd. Okay, so November 22nd, something happened. Obviously, it's a trade happened. I'm going to try to figure out why and what was going on. I see the open interest up. I go down here, November 22nd. I just want to kind of get to see some data here. Okay, there it is, verifying everything. The next day, the open interest went up by almost 7,000. So it's about 7,000 opening, but it could be about 7,500 depending. It could be about 7,500 depending on who he bought it from. The floors could have been closing some. So that's there. Okay, see that, 58. Okay, fair enough. Now, I just simply close this. I'm looking at November 22nd in MP. I can just click the calendar. November 22nd. Again, I want to verify what I'm seeing. Here's the print. Okay, and now I'm looking at March, 35 calls, ask side. Okay, 2,000, 2,900, 2,500. I see that. 35 is right here, 5,520. Okay, and open interest, 1,300 versus 6,700 total volume. Okay, opening, fair, everything is good. And now I want to go check the target stock price. So I come here, I'm looking at the March. This is on November 22nd. He's buying the Marches here. Here he is again. Okay. First thing I would say is that I have this machine shaded. Okay. So when it's shaded, this is sort of the area I want to see people buying. Right? If it's outside this curve, there's something, there might be another explanation, but outside this box, these two boxes, there might be some other reason why they're buying options or selling them. But within here, this is sort of the money shot, right? This is where guys are looking for leverage. They're hunting around for that opportunity. So the fact that he's in this unshaded window here, immediately I'm thinking, okay, we're onto something here. This guy's looking for leverage. Okay, it's a shark. He's looking for leverage. Now, I got to get the pointer. To land right here. Again, the machine thinks like him. He thought this. He picked that one. So my machine's got to get the pointer there. Now, I'm going to use this as a guideline, 46. So I'm going to say 47. That's not going to be enough. Okay, and this is sort of giving you warnings here, telling you, hey, your target stock price is not enough here. Okay, but 47, I'm going to try 48, nothing. 49 gets me there. 50, 51, starts moving closer. It's trying to be between 35 and 40, and 52, 53 gets me to now 40. So anything above 53, and he's not choosing the 35s, he's going to be choosing the 40s, right? Because he's going to be making more money on a risk reward basis. 280 to make, talking about $13, you're going to make around 5 to 1 on that, 4.75 to 1. Okay. At 35, it's a little bit less. Okay. So now let me get back to here about 48 to 49. And now I could say, okay, 48. Remember I told you at 47, 48, he's a little bit below, but I can move this confidence bar. And if I moved it all the way to 100, which the machine is going to tell you, you should never be 100% sure of anything with options. So it's going to try to warn you, saying, 100% confidence is probably too high. But if you start moving it back, you could see the pointer moving up and down with your confidence. The less confidence you are, the more it's going to take you in the money. Okay. And probably out of the trade. It's going to tell you basically get into stock. If you like MP, buy the stock, forget about calls, or do some sort of other trade, which could be a call spread, could be butterflies, could be a bunch of other things. Okay. Or it could even tell you that the options might be, this is basically if the pointer's not, if you can't get the pointer here, it's essentially telling you that the options are too expensive for what your view is. They're too expensive for your view. So you may even consider buying, if you own the stock, maybe even consider selling options because it's too expensive. Okay. So this is how we're looking at it. This is what we're getting to. Now, let me get back to, once we do that, I want to get back to where we were. I just wanted to show you how within a couple of minutes, I can gauge what's happened here, what they've done, what they're looking for, and using some technical analysis, trying to make sense of this person's thought process. So I find that they're looking at 48 to 51, and I am looking at the, let's see here, make sure I get this. I'm looking at the screen and I'm trying to make sense of his target stock price. Now, November 22nd goes by, the stock gets hit. End of the year, stock gets hit and then starts coming back. Now, I think this is actually pretty good here. Okay, this to me is a good sign. The way it got hit and then the way it bounced back, right? It went through the lows and then in 2 weeks came roaring back. That's positive for me. That to me, I'm looking at that and say, okay, now I'm on the other side of this, this hole here. I'm trying to dig myself out with MP. Okay, can it get to 51 here? I'm still not sure. 51 is a long way from 30 these, at this level. And, I was patient enough to watch it come down. Now it's like on the turn. You can see this is a different setup than where we were before. I like this setup because I see pain. I see pain for long holders on the way down. And now the market just kind of shot back up and I'm saying, okay, I'm on the other side now. I'm on the clear side. Okay. See sunny skies ahead. So I'm looking at this and I'm saying, okay, well, what do I think? Where do I think it can go? Now I'm using my own technical analysis. So I start pumping in some lines here and say, well, the November high here, 36, that's, resistance right now. And then you got the 40. So if we can get through 36 on this push up, right to 40, that's a big number, right? So if I'm thinking 38, I don't have to think 51 like this guy thought, but now because the market's, first of all, it's about 6-7 weeks later and the market's lower, I can actually find a lower target stock price. So with the lower target stock price, I go to the new option chain and I stick 38. You see 38 up there in the same month, March. And the pointer pops up at the 30 level, $2.70. Now his 35s are at $1.05. Remember, he paid $4.20. So with a little bit of patience and sort of monitoring this trade, I'm getting in at $5 strikes, $5 lower on a strike basis and $2.70 on a price basis, much lower. That was the trade we took, but we're still not there. It's still not good enough. All we've done now is we've verified what traded and whether or not it was an opening buy and what might he be thinking as far as the chart goes, as far as price. But what we're still missing is the why. That why would this guy think MP is going up to 50, 48 to 52 or whatever it is? Why? What's the story behind that? Okay. And that takes a little bit of digging. So each time I put out an idea, I try to use the exact logic I'm showing here. And I'm trying to say, okay, now that I understand the situation, now I got to start digging into the logic. And the logic is why? What made it exciting for this person to come in and thinking it's going to go up that much? I don't know. I barely know MP materials. So I start digging. I start looking at articles. I go back to an earnings conference and start reading about it and start listening to the CEO. I'm looking. I was curious about MP because they signed a long-term contract with General Motors. So as I'm quickly scanning, and I'm doing this, I'm not like building models. I'm not doing deep fundamental analysis. It would take too long to do that. Imagine doing that on every stock that you couldn't do. It's impossible. First of all, most analysts on Wall Street, these hedge funds, they're spending the whole year analyzing 10 stocks. I mean, it's impossible that you're going to find a stock and all of a sudden analyze it, build a model. By the time you build a model and analyze it, the trade's likely done. So there's a quicker way to do it, and it's skimming through and getting an understanding of what the person who bought these calls has likely done a lot more work than you'll ever do. Okay, and so getting past the whether it's trading at this level or at that level, or revenues good, we're sort of assuming that he's done some work, and we're trying to figure out not that it's going to go up, but why is it going to go up that much? What's sexy about this stock? Well, here's the story, and you can find this just by Googling stuff. It's nothing. People ask me, what's the secret? The secret is just got to read a little bit. You got to read and start poking and asking the same questions I keep asking right now: the hows, the whys, the whens. But here's the story: China dominates the mining, processing of minerals in EV battery packs. Okay. In August, the Inflation Reduction Act gave credits, or will give credits and funds money to manufacturers buying American minerals. It's Joe Biden's way to say, buy America. Okay, we want everyone buying America. Okay, EV batteries and wind turbines, okay, but in this case, we'll concentrate on EV batteries. They require what's called magnets. As far as I'm going to go with the EV batteries and how to develop, because I'm not a scientist and I don't know the ins and outs, but they require magnets is my understanding. And magnets contain rare earth minerals. MP, like I said in the beginning, is the only operational rare earth mining and process facility in the United States. That said, their processing facility is not that big. So they actually have to send, imagine they mine, I think it's called the Mountain Pass in San Bernardino in California. They mine for rare earth minerals and then they send them to China. And then they got to wait for China to send them back processed. And then they sell the product in the United States. So obviously the United States government's not sort of happy with that setup. Okay. EV batteries, obviously a big movement over the next, call it 10 years, 5 to 10 years now. And the DOD, the Defense Department, the United States Defense Department, they gave MP funds to build out a processing plant in Texas. They started I think it was about 18 months ago. Okay. So again, I'm just reading this. I Googled MP and I Googled the plant. Once I learned on the conference call, you hear them talk about Texas plant. So I just Googled Texas plant MP to learn more about that. Saw that the DOD gave them funds. Oh, okay, makes sense. Why did they give them funds? The Department of Defense, this has become a national security risk that China basically owns. They dominate the whole mining process of minerals. I mean, it's for EVs. This is not gonna end well if the whole world is changes to EV and China dominates it. It's just not gonna end well. And so they are looking for MP to help them build their supply chain. It's pretty clear. Okay. And then over last year, I think it was in April, GM signed this long-term supply contract for magnets, rare earth minerals from this Texas plant. Okay, so in shorter terms, you have MP's clients, auto manufacturers, getting government money, and they want the government money, but they have to buy America. Okay, so they have to buy America, and they're buying from people like MP, and so they're entering these long-term contracts, which GM did. The U.S. government is actually giving MP money to build the supply chain. They're the only ones with a rare earth mineral and processing facility in the United States. So if you want to buy rare earth minerals in the United States, MP is your only choice right now. I think there's a couple of the small ones, to be honest, that I saw. CNBC had a video that I watched, and it seemed like, but it looked like they were very small and just developing. And lastly, the government is MP's client. I mean, in one word, that when I put this together, I just thought seems like a monopoly right now. Right? A monopoly sponsored by the United States government for MP, right? The MP's building out the supply chain. The auto manufacturers need to buy American goods. They're buying from MP and they're getting the money through tax credits from the United States government. So for me, this was sexy, if you will. Okay. I thought, okay, I get it now. I understand sort of the trade and what's going on. And as orders start coming in, as the money starts leaving the government to, General Motors, and General Motors starts, requesting more minerals or magnets, and the money starts flowing, revenue should pop up and the stock should actually start moving. Now, is the stock cheap? I looked at it. It looks a little bit expensive, as it should be if going forward, you have a lot more money coming in. So I think the market has priced some of it, but it's had a big drop from where it was. Putting together that is how I teach people, and how I'm trying to get people to understand it. Again, it's a process. Now, we bought the March 30 calls for $270. They wound up going to $6. And now they came back. I did this last night and they were $270 today. The stock was up about 4.5%. Why was it up? One, the market was up, but two, Ford announced they were building this EV battery facility in the United States. So you're starting to see these companies actually saying, okay, well, we want to get the money from the United States government, which means we got to build the batteries in the United States. And one of the questions that people were having or were asking for today was, hey, you partnered with, I believe it's CATL, it's a Chinese company. And isn't that, doesn't that go against the whole the whole the whole thought of buying America, if, you know, and Ford had their answer that they were separating the technology and that there was just going to be clear division. But you know, I don't know about that. You know, I look at that and I say it doesn't really pass the smell test for me. So, you know, the point is that, again, you have a company here that is producing minerals and they're the only ones doing it. To me, that's a monopoly. And when the government, the DoD, is actually paying them to build out plants, it's not even, they're just giving them money, funding them money to build out plants because they know that the supply chain has to be developed, and MP will stand right at the center of that. So as a long-term trade, I think this is a good idea as well. And frankly, after I do a lot of these, you know, a lot of the ideas I give there, you know, they might be six weeks to 10 weeks in nature, but many of them are, you know, you can use that same logic and watch it develop over time. So that is the trade here. You know, one of the things that I did look at was because the earnings are next Thursday. You know, I looked at the September options, and the September options were $3 and let's call it 80 cents. So $3.80 for September 35s. You could buy the same. You can buy 6 months out. The March 6-7 months out. The March 35 calls for $3.80. Which is still cheaper than what he paid $4.20 for the March 35s. And I mean, you can get those right now at $3.80. Not today. The stock moved up again today, but I also looked at the 35s, and I also thought that this was a good trade as well. The 35-45 call spread for $2.50. So $2.50 gets you 3-to-1 payout on the stock going to 45 by September. I think that's good. I think that's a good payout considering we're a little bit lower than 45 is lower than he's thinking, closer to 50. He had his numbers. By the way, he may not still think that, but the point is that nothing has really changed except the market went down and back up. And so I'm leaning on the fact that he's done the analysis. He was thinking this. Now everything seems to be turning, and I'm going to still use that, but I'm going to look at the 45s, and I'm not going to be greedy. You know, at 250 to make 750, that's actually not a bad trade. So that's the trade that I would look at. I think MP as a long-term play is really interesting. Could the price go lower? Of course. And if it does go lower, at least you know the story now. You know how we're playing it. And again, it's always risk reward. It's always if the market goes up and the IRA funds start flowing, MP should be right at the center of that going forward. That's what we're looking for. The if this happens, then this. If earnings are good, then the stock should trade 35 next week. If it's always the if then. And once we isolate that and understand the big picture, then we can make a judgment call and say, I like that trade. I like the story. I like the setup. Or I don't like the setup and I'm going to wait. But you have things, you have a process. Now, this is just the beginning of a process, right? There's other things. And I always tell people, you know, look, Market Chameleon has all the data in the world, right? So you can take all that data and start adding to this. How does it work? How does MP trade around earnings? Okay, what type of dispersion does it have? How does the implied volatility look at 55? You know, if you wanted to look at that and sort of saying, you know, add a little bit more to your target stock price and say, you know, is that too high or too low? Skew, you could start taking a look at all these different things, events, seasonality of IV. There's a bunch of things within Market Chameleon that's data. Also, technical analysis. Like I said, I showed you horizontal lines. I particularly like horizontal lines or, you know, simple curves, but there is Elliott wave, which I like as well. There's Fibonacci I like. So it's basically, for me, it's Fibonacci, Elliott wave, moving averages, price versus volume, breakouts, and support resistance. Those are simple. I keep it simple, stupid, to show me where the big levels are that I can sort of produce this range of prices. So that is the taking it from, you know, first understanding options, understanding what you're looking for, understanding, you know, different concepts like the skew, understanding how the top 1% think, how they think about risk reward, as opposed to the Greeks, as opposed to not so much implied volatility. They use implied volatility as a gauge. So it's not like they're doing this, super duper mathematical process on the Black-Scholes formula. It's not how they do it. They think they're focusing on the target stock price. They're trying to reduce all guesses and focus on that target stock price. That's how you win at a probability game, by reducing the guessing. So we got education to the tools, and then developing these trading ideas, how you do it, which is a process I've been showing here. Again, I would look at that series. Again, it's not, if you're not a member, it's not going to be up for long. I'm going to take it down. It's valuable. You will learn a lot. And again, another video I have on the website. If you just sign up from the homepage, you could see it. That was the first idea. I have another idea, and
hey, we did have some questions.
Any questions? Go ahead, go for it.
4D was asking, listen to Felix with this MP. I can see why he believes these calls were bought. However, is there a way to see that they were actually obviously someone bought them and someone sold them? But how do you rationalize if there was like an aggressive buyer? I guess
sure.
Is what 4D's asking.
So this notion that there's a buyer and a seller is true, but really there's two parts to that equation. There's a customer buyer, and then there's a market maker seller. Market makers are playing a whole different game, a completely different game. So I don't even put them in the equation. You're really looking for that customer who comes in and he wants to buy for a reason. Market maker is going to make a price and trade the option a different way. So I was one of, if you work at the top investment banks and you're dealing with the top guys in the world, you are the top market makers in the world. So I was one of them. There was probably, over the last 20 years, 200 of us, and we were making markets, 10, 20, 100 times the size than the market makers on the floor. Okay. So if working at the investment bank, you got billions of dollars that you're making markets with, that's what, I was a market maker for the investment bank. Customers would come to me because they wanted to get long MP, and I would have to make them a market on the fly, not asking 30 guys on the floor, hey, what do you guys think? Where do you guys want to make this market? I had to make it. I was the one saying, I will sell it here. I will buy it here. What do you want to do? So I would take the market maker out, and I would say, just focus on who's coming in to print.
Rick was asking, he's super busy, doesn't have a lot of time. Is there a way to get your ideas, I guess, in an email or a text, or is there another way to get them?
Sure. So there's two different people that come to Options Geek. There's the person who wants to do it themselves. So I teach people how to do it yourself. Then there's the lawyer, doctor, professional who doesn't have the time to really spend to do this and wants the ideas. So it's called Winning Picks Premium, and I give them the ideas. You get everything with it, behind it. You get part of the program, but you get the ideas that I'm delivering and the whole script that I wrote out and the logic, and you can play it that way. There's annuals. I'm probably going to take out the monthly unless you buy the education, but there's annual memberships. I give a tremendous offer with the satisfaction guarantee with the annual. It's very difficult for me. It puts a lot of pressure on myself to succeed, but people should read it and read what the satisfaction guaranteed is. Also, I have a product that I do with actually one person, but he really likes it, and I guess there's a market to pay for it, and that is, he just says, I'm really busy, just give me one idea a month. So he likes it. It allows, we have a half-hour call each month and 45 minutes, and we go through the logic of one idea. And maybe he doesn't, maybe he doesn't, doesn't do the idea, but that's what he's paying for. He's paying for, give me a solid idea, give me your best shot, every month, and let's talk through it. And he challenges me. We walk through it. There's other different ways we could structure it. He's a little bit more advanced. And so that's something I'm considering where, if people just want one idea or two ideas, right now I give approximately 8 to 12 ideas per month. But, this whole idea, this whole product of just one idea seemed pretty interesting, and maybe people, that's all people want. I don't know.
How, when people talk about risk to you, Felix, like, I mean, it just seems for me from my years as a market maker and trading, that it'd be better to look at 8 ideas and put a small amount of your portfolio in each one.
Right. Well, I would say, yeah, that's kind of the way we play the game. The way I've structured Options Geek to help the investors say, hey, look, we're not trying to, we're not trying to kill it on one shot. If you want to do that, if some people want to do it, what we're trying to do is play this portfolio of trades over the course of time. And over the course of time, things should work out okay. It should work out okay. Any week, any 2 weeks, any 3 weeks, any month, 2 months, I think that's why I'm trying to get out of the monthly, because if you have one bad trade, the first trade, people get, they don't want to, this isn't like we're YOLOing all our money. We got $5 grand, we're throwing $5 grand on the first one.
Yeah.
It's not how we do it. That's not what we're doing here. We're playing a strategic, I call this a strategic game for people that are thinkers, that are smart, that want logic and understand what they're buying, what they're looking for, and to make the decision themselves that, hey, this is what it seems like this guy's playing, I want to get in.
Very cool. We only have about 10 minutes left. I don't know if you want to get to another idea real quick.
Yeah, real quick. I'll show people something that, I put on the, let me show you here. So stop share. I'm going to show you. So yeah, I mean, this is, as part of the whole site here, I have this trade idea forum, and we have different categories here. You can see it's a lot of stuff in here. Keep people busy. Part of what I do is like I said, I have the education, I have the tools, and then I'm trying to feed people what I'm looking at, all the research I'm looking at, everything I'm looking at to make decisions, the macro research, position research, we're doing, I'm doing a lot of reading, and I'm putting it in there for people so that they can see. I also have these UOA trades where people also put in their trades. Actually, one of our trades was Man United. So far, it's worked out okay. Pretty good. We'll see what happens, but that came from one of the users, and that's what I'm trying to build. I'm trying to build a community of thinkers, of guys where they could shoot an idea to me, and I can, he asked me, essentially, he gave me the idea. To be honest, I'm always, upfront, say, yeah, I got the idea from here. I had seen it when Musk put it out, but he gave me this idea here, and then I actually looked at the options, and I basically was explaining to him what I thought happened, what I thought about it. And, I gave the thumbs up. I said, I think this is actually, there's something there. Okay. So, we're looking at that, but here, the idea that I'm looking at is in Tesla right now. And so I gave this idea. We were here early on Tesla. We were seeing a lot of flow all the way down. We were pointing down. I had given a bullish call near the lows. I did not do it. I didn't think the price of the options were cheap enough to really get in there, but some guys did it. I could show you a couple of guys, put their that position on. But here I put this is a long thread in Tesla. We're throwing in analysis, research, putting stuff that I see and logic behind it, Tesla profit margins. But here we're looking at March 1st, the master plan. This is the chart. This is my chart. I think 205, call it 200, 210 is an important level. Telling people here, there's going to be it's like a street fight here. If it blasts through, this thing's going to move. But the shorts are not going to let go of this so easily. And we've seen a pullback here. So I did this was last week. There's a pullback here. We're looking at the master plan 3 coming up in March 1st. This is an investor meeting. I give my quick thoughts. Here's one thing for the bulls. I throw this out there. How long before China says they're going to subsidize NEO, Lee, and XPEV? and that could hurt Tesla. Tesla's not going to be the top selling car in China and destroy NIO, Lee, and XPV. So, something might have to give there, just a thought. But again, logic as it comes. Here is an idea that I posted there just over on Friday. I showed this. I think it's interesting. And I did use MarketChameleon a little bit on this, but the trade idea is to buy the March 3rd options in Tesla and sell the February 24th options. So the question, people say, well, what strike? Well, because we're doing this spread right now, when I saw it on Friday, it was about 2-3 volatilities, and that was pretty cheap for a March 1st. I think of it as earnings. And when February 24th comes around and one option is going to expire, either parity or zero, there's not going to be any optionality. The only thing that's going to be left is the March 3rd option. And right in front of this meeting, like in earnings, I can imagine these things are going to be well bid. And so I thought that at 3 vols, even 5 vols today, this is a decent spread. Now you got to pick the strike you want. Okay. And you can pick, today, the 200s were about 350, 360, went up a couple of pennies over the weekend. The 210s, they were about $3. They're still about $3. This is a trade where if you buy this, if you can buy the 200 or the 205 or the 210 or the 195, let's say the CPI is bad tomorrow for the market and Tesla trades down to 185, 182 or something like that. You might say, all right, well, let me look at the 195s, the 190s. But what you're trying to do is you're trying to find, sort of like pin the tail on the donkey, a range where Tesla is going to be, not this week, next Friday. Okay, so what I tell people is do this, and then you're at the bottom. The key to the trade is not to look. You're going to spend $3 on the trade. You can buy one lot 2 ways. The February, selling the February 24th, buying the March 3rd, one lot, and don't look. Don't look. If it goes up, it goes down. Don't look. I'm telling people to kind of find that range. I would say 200 is pretty good, because within a $20 up and down range is probably break even. So that means if Tesla is at 180, those on that Friday, February 24th, the 200 calls are probably going to be around $3, maybe 250 or something like that, 275, depending on what vol is and depending what they think is going to happen here, but should be probably around $3. And if you get from 200 to 215, 220, again, it should be at let's call it 10% up, should be around $3. That's going to be my guess. Maybe I'm off by 50 cents or whatnot, but above that or below that 50, call it $15 to $20 range. Above that, below that, you're going to start losing that. If it goes down to 170, that 200 call is going to be, maybe $1.75. So you're going to be down $1.25. But if it lands anywhere near 195, 205, and remember that level, technical analysis has a funny way of actually attracting that pivot level, has a funny way of attracting the stock right before the big announcement. So if it does land at 200, 205, then where is the 1 week 200 call option going to be with Tesla 200 on February 27th, that Monday? It's probably going to be around $12. Right? It's probably going to be around $12. I would say even more, probably maybe $14, $15. So you're talking about risking maybe $1.50, call it, on the downside, because I think there's some floor with Tesla, $1.50 to the downside. And then to the upside, you might get, it could be, I could see it, it could be a $7 to $9 winner. Okay, if you hit it right on, pin a tail on the donkey, you do the 200 spread and it lands at 200, you're going to be, you're talking about an option that's going to be worth about $12. That's probably worth $12. You're never going to get it perfect because you got to get out of the Fed 24s at the end. But let's call it $12. You pay 3 to make 12. That's 9. 3 to make 9. That's 300%. Or you're going to lose about $1.50. If it crashes, goes down to 200. Goes down to back to 100. This trades, you're going to lose your $3. You lose your $300. So something that, I think is good. I think that, I could show a chart in Tesla and what I'm thinking about real quick. I'm just looking at it here and saying, okay, I could show you quickly how I look at charts and just say, all right, this is what I'm thinking. We have this right here where it's this big level here. You have what we showed here, just connect the dots. And I don't know where this dot is yet. Okay. But you have something here that potentially could be here, if you will, but I'm going to draw it this way for right now, but we're right here. I'm looking at see this line right here? 312, 205, 207, and then down here is 102. A lot of symmetry there. 102 to 207 and a half is $105, right? 102 and a half to 207 and a half, 105, and then 207 and a half. Oops, sorry. 207 and a half to 312 is $105. So you got a very symmetrical range here, and the middle is dead center. So you're talking about if this pushes up, yes, you have the 50-day coming down, but my thought is the following: what if we're looking at something like this? I'm going to Jordan Green here. You're looking at something like this, like this, like this, like this. And if we come back, say, bad CPI number tomorrow, we get down to 175. What does that look like? It starts looking like a potential, reverse head and shoulders where you could just scream higher, catch everybody off guard here. The shorts start piling on here, think it's coming off, and then make another big move higher into that March 1st. So I'm looking at something like that as a possibility, or it could just simply go straight back down to, 140, 150. I don't know. But this is how I'm trying to frame the conversation. I'm trying to look at it and I'm saying, okay, I got the volatility in my favor on that spread, $300 or $3, and I can get a shot at master plan 1 or 3, whatever Elon's gonna say. I also think he's going to talk a lot about AI because that's so hot, or I think he should, and the board should say, just keep repeating AI. And basically, the biggest AI machine is the car, and the AI. So the over under on AI is going to be 100, I think, on that day. And you see how Microsoft is moving on AI. They move Microsoft 20%, they can move Tesla up 50%. So that's something to think about. Again, how I'm framing it. Good risk reward. Do I know what's going to happen? No idea what's going to happen. No idea. But I know that that's good risk reward, risking about but as long as we're in this range of like 170 to 230, risking about $1.50 to make potentially, call it $6 to $10.
Yeah, and Amy Jones said options are so risky, especially on Tesla. And the thing they what you're risking though, right, Amy?
Right. In
it's
this
like
case,
the stock,
right.
you buy
I'm
the
always
stock, you're
exactly.
risking a lot more capital, right? Here, you're identifying your risk, what you'll take in and what you'll potentially make.
Exactly. We're defining the risk. That's most important.
Yeah.
That's why I'm teaching options to help people. This is what we're defining the risk. It's $3 on Tesla. It's hard to get a $3 bet in Tesla with a little meat on it. And so that's why I like it as well.
Yeah. And Kathy Woods has been saying, I know she's been wrong the past year and a half, but she's been saying for years that the value in Tesla is not so much it's the AI and their technology. Right. I mean, she has been yelling that at the top of the tower for years.
For anyone to listen. That's right.
Yeah. And AI is hot right now.
I mean, I have a feeling with so much going on with AI, I think the opportunity for them to discuss how Tesla is a moving AI, car and show it in some fashion. I think that can get the stock going again.
Well, perfect, Felix. That was a great hour. 2 great interesting ideas, MP and Tesla. I've put the links to your website in both chats. Any last comments for the chameleons who are on? Anyone who joined us tonight? You there?
Oh, for me, is any last comments?
Yeah.
No, I would say, listen, I think what the comment about defining your risk is important. And I think that, any education should help you define the risk and teach you how to play the game the right way. And I think that's what's lacking in education. And I think that's what sets my education apart from anything else.
Well, I recommend everyone check out Felix at Options Geek. Go to his YouTube channel. All those are in the links, and they'll be attached to this video that will live on the Market Chameleon YouTube channel forever, Felix. It will be there forever with probably Felix's other 15 to 20 videos. He's been a great partner and friend of Market Chameleon in the community, and is a great resource for anyone who needs education and a trader, and it's a great website. So thanks a lot, Felix, and we'll see you soon.
Thank you, guys. I appreciate it. Thank you.
Have a great night, everyone. Bye-bye.